Morning to all traders and welcome on this Tuesday, the 15th of September. So the US fiscal stimulus bill was back in the headlines as economists have stated that the US recovery will take a lot longer if a bill is not passed soon. It will the rebound will lose steam at the end of this year and early next year, creating a drag on the global economy as it tries to recover from the worst contraction since the Second World War. The World Health Organization has recorded its biggest daily rise in new COVID infections. The biggest increases were reported in India, America, and in Brazil. Countries across Europe as well are also recording a rise in number of daily cases amid fears of a resurgence in the virus, with the UK especially implementing a new rule of a maximum gathering of 6 people at a time from yesterday. In other news, software giant Oracle is believed to be the frontrunner in the bidding war for the video application TikTok. ByteDance, who owns the application, is said to have struck a deal with this software giant. However, the Trump administration is to review the partnership before deciding whether to improve the agreement or not. This comes as Microsoft recently dropped out of negotiations with the Chinese company on Sunday night. So today I just want to go through a couple of US stocks, Oracle being one of them since it's in the headlines the last few days. So what I want to just have a look at today, I wanted to look at the short-term chart. So we've seen from June that we've seen this upsurge and then obviously a bit of a down sell. I want to just zoom in a bit more just to get a bit more of a short-term perspective here. So what I've seen in the last few days since Oracle has been in the headlines is I just want to put a channel in. So we saw a bit of an ascending channel from the recent low that we witnessed in the middle of August, and then we saw it break out, and then since the news has started to hit the headlines about Oracle and TikTok, we've seen this huge gap on the weekend, especially I'll just highlight it here. So we've seen this huge gap on the weekend, and then that almost brought us, I'll zoom in a little bit further, that almost brought us back up to record highs which we saw at the back end of last week. So it almost did another test onto this period here. So what I want to do is just put a Fibonacci in from the lowest that we've seen in the middle of August up until the record high witnessed recently. So of course, with every news, when a company hits the headlines, there's always a big push, and then we're looking for the down sell. So now it's going on the downturn at the moment, as you can clearly see here. So we've hit the $60 mark, which is quite a psychological area for it to either hold or push through. Now it's actually gone through that, and we're looking at more downside. If it can hit the lower channel of this ascending line here, if it can break through that, then I'll be looking today, or probably through the course of the week, if it's going to hit the 23.6, which is roughly about $58. And then there's no reason why we can't see some more selling pressure on the way down as we break through $60, 59, 58, and then get to possibly the $56 range, which will be basically going towards the recent lows that we saw last week. So a lot of potential on the downside. It just depends if the Trump administration, like I said, does approve the deal. If it takes a long time to approve, we could see a bit more of a negativity on the share price. But again, if the deal does go through, there's no reason why we can't see another test at the upper regression and towards the $62 range where it was before. I want to take you through Microsoft shares as well today. I've noticed that the ascension since the pandemic really took hold from March has really put Microsoft into a nice upstream channel, and now we're seeing a bit of a downsell. So it was always going to happen eventually. It was just a matter of time. So if I just zoom in on the area that's more important. So what I'm going to do is put a Fibonacci from the recent fresh highs to the lows that we're experiencing. And what I've seen over the last few days is that it's failing to break away from this $205 range. It's kind of just a bit choppy, sideways pattern, and now we're looking for either a push on the upside or downside. It has a very good potential to keep pushing further down if it can break this psychological barrier. I would say probably $200 range, which is roughly about here. If it can break this range here, then we can probably see more downside, and then that will take us to previous lows that we've witnessed in the middle of July and then at the end of June. So there's no reason why it can't go any lower with the selling pressure that we've seen. If we can get past this $205 range, we go up to 210, and then we go up to 215, which is the lower ascending channel bottom. So we can keep an eye on this. What I'll be doing today is just to see if it can break free from this $205 range, and then we can see what direction it has a chance of going. As I said, $210 I'll be looking at, and the $200 range as well. So a break of one of these two prices, we'll see if we can put in a buy or a sell going forward for the rest of the week. That's all for today. Thank you very much for joining me. If you have any comments, feel free to add them on the post, and I'll get back to you as soon as possible. Thank you very much. Have a nice day.